Manishi is back with us. Manishi, good morning. You were telling us about your view on the market when you got cut off. How are you feeling now at this juncture? What is the prognosis for the next, say, 6 to 12 months?
Okay. As I was about to tell you in reply to Prashant's question, that yes, the Fed is completely concentrated on domestic inflation, and that's likely to continue for some more time, which means that there would be aggressive rate hikes, possibly 75 basis points in November, another 75 in December, and our economists are forecasting yet another 75 basis points sometime during the first quarter of 2023. In this situation, and when you combine this with quantitative tightening that has begun in earnest, it's almost certain that the US dollar appreciation would continue. Developed market demand would continue to be destroyed, and that's not really good news for Asian or emerging markets. So continue to expect downside to the Asian markets, but at the same time, India may continue to be a relative outperformer in that scenario because investors are looking for some degree of growth assurance in the Asian markets. And the North Asian markets like Korea, Taiwan, or China being more linked to global demand don't exactly fit that bill. The domestic markets like India do.
Okay, all right. Hi, Manishi. The last time we chatted, you were telling us that there could be a time-wise correction for the Indian markets. Well, let's talk about the price-wise correction. We made a low earlier this year at around 15,100 odd. Will that level hold out?
I would think that, if you look at the near term, maybe over the next 1 quarter or so, there could be some price correction as well. Because while most other markets, and again, especially the North Asian markets, valuations have corrected to less than one standard deviation of below their long-term means, India is kind of sticking around at close to the mean or maybe one standard deviation higher. So there is some valuation downside to this market. It may not be as severe as the other markets, particularly the North Asian markets, but there could still be some possibility of an actual price correction over the next 1 quarter or so.
Okay. Well, Manishi, it's festive season time and there's a lot of token buying that happens during Diwali, right? This time around, where do your preferences lie? Which are the sectors or even stocks you think that can outperform the markets over the next 12 to 18 months?
Yeah, first preference in this regard would lie for the private banks. And this is a sector preference that we have had for a long time. We think the private banks are the best suited to cater to the upcoming CapEx cycle, which, it's difficult to lay a finger on exact timing of when it would commence, but possibly, sometime in the second half of next year, we should begin to see concrete signs. They're also better geared to benefit from urban consumption, which is clearly stronger than rural consumption in India today. So private banks clearly is the first big silo that we would play. Second, we are also positive on autos. It kind of squarely fits in to the theme that you just mentioned, festive season demand. And even over the longer term, we are now seeing both urban and upper middle class demand coming back, which obviously fits well with the automobiles, particularly passenger cars and higher end two-wheelers or some of the SUVs. Those are the segments that we are now more focused on. Finally, we also, maybe to a lesser extent compared to the previous two sectors that I mentioned, we also like the IT services sector after it has declined so much, because the demand from the developed markets, which is flowing through into orders for the top-rung companies, that still remains strong, and that's the commentary we have received from the top-run companies, IT service companies in India. And, of course, the rupee tailwind, I don't think has played out fully yet.
Okay, all right. Manishi, let me probe you a little bit on that IT point then. Is it going to be just large-cap IT that you like or some of these mid-cap names as well you would look at?
You see, we are still focused on the large-cap IT because we think that if we do see a downside to the demand, which potentially could still happen sometimes next year, then the large cap IT, which are more diversified, catering to more business segments, they would be the ones to withstand such potential demand downside. The large cap IT companies are also, in a way, rediscovering themselves. If you look at the kind of commentary that's coming through, it's really the frontline large cap IT service companies which are, they seem to be better placed as far as new order inflows are concerned.
All right, Manishi, it's a pleasure speaking to you. And in case we don't chat before Diwali, happy Diwali to you and your entire team at BNP Paribas. This one's a good one compared to what we've seen in the past. So things have definitely improved. All the best. Thanks a lot.
Thank you very much, and a happy Diwali to your team and our viewers as well.